Okay, good morning, everybody, guys. I trust you had a beautiful public holiday if you are in South Africa. Yesterday was our national voting day, and I trust as many of you voted as humanly possible. Guys, this is Tuesday, this is Pips for Breakfast, and we're about to have an amazing time together. I've got a ton of things I want to show you in the markets. There are opportunities everywhere. We saw last week a lot of broken market structures, where this week I think we can expect a lot more conforming of these structures, and I'm seeing a ton of them develop, as well as some massive opportunities on the dollar that I'm going to be showing you guys in just a second. Now we're going to look at some of the fundamentals. We have a fairly quiet day from a fundamental perspective, but remember, this week Friday is NFP, non-farm payrolls, and as always I trade this live with my master's students. Now I will be including the signals group into this Friday's live trading session, so if you're not already either master's student or in the signals group, make sure you get yourself a part of that. Now then, steps and instructions of that are in the main DVDM markets chat that is pinned right on the top. It's a couple easy steps. It's absolutely free. There's no cost to you outside of funding your live account to obviously take advantage of these opportunities. Okay, so let's jump straight into the markets. Let's have a look at what we can expect today, and I think there's going to be a pretty exciting opportunity we're going to be able to take advantage of together in the markets today. So it is going to be a fairly quiet day. We've had a little bit of data come out in terms of Australian dollar. There is going to be opportunities coming out later tonight in terms of New Zealand dollar, so obviously stay tuned for that. I'll speak about that in a second. But in essence, a fairly quiet day. We've got some ZAR retail vehicle sales, which I don't think is going to move the markets much here. It is what it is. And then later on this morning, the main focus we're going to be having today is going to be on the PMI, right? The Italian, French, German, as well as the total European PMI. Now, this is going to rock the European markets quite substantially. In terms of the top 5 things we have coming up this week, I'm going to quickly speak about them really quickly. So we had last week a pretty big earnings season on some of the big names, obviously Google, Amazon, Apple, Facebook, which is now soon to be called Meta, as well as Amazon. Now we still have a ton of more earnings reports coming out. These will affect the S&P 500. There aren't too many technology companies in terms of their earnings that are going to report that are going to really affect the US 100 or the NASDAQ. So the main focus right now is going to probably be on the S&P 500. NASDAQ did a massive run last week after all of the great tech data that we got out. So that is kind of, if you've missed it, you've missed it. Obviously, as I've just said, non-farm payrolls, which is the unemployment and employment rates in the US, as well as hourly earnings, average earnings, hours worked, so on and so forth. That is coming out this Friday, and we're going to be trading that live together. As the data comes out, we're going to position ourselves in the market and take advantage of that earnings report. Now, the last 2 earnings reports have been underwhelming, have been fairly dovish, and I'm going to show you where the dollar is at a second, and this should get you quite excited because I expect something big to happen this Friday on the NFP data. The Fed is meeting, has been meeting, and essentially this report comes out tomorrow on US market, essentially closer to US market close, 2 p.m. US time, and this is going to give some sort of indication about this whole tapering or the easing of all of these special incentives to jumpstart the US economy. Now, the markets are reporting one thing, that the tapering will happen in November, but the last one that we streamed live, if you guys remember, I think I streamed it live with my masters, they were discussing only looking at the tapering in next year, and November, December will give that kind of benchmark as to when that will start. However, a lot of the news stations are reporting that the tapering will happen in November, where Powell obviously did not say that. We heard him say live that, you know, this will start happening in the course of next year, closer to next year, May, somewhere around about there. So it'll be interesting to see if anything has changed between now and then and how the markets react to that. As I've said, PMI reports are going to be a big item on the card for this week. Obviously, US, UK, and Germany, and as well as some of the other Eurozone countries are reporting. We know that a lot of the Eurozone data is coming out today, and because it's coming out in such a tight space, we have the French at 11:15, German at 5 to 11, European at 11, and obviously Italian 2:15. So in the space of 15 minutes, we're going to get all of these news releases, and there's some really cool opportunities I want to take you guys through, which I think we have a great opportunity to make some decent money. Crypto, other Bitcoin ETFs and monetary tightening. Now, there's a lot of discussion around what are ETFs, and I want to just speak about this for a second this morning. So an ETF is essentially a special vehicle. It's a new type of financial instrument or financial fund, and it's essentially an exchange traded fund. One of the first ones that popped out, not necessarily the first one, but the one that became the most famous, you guys can go read up on this, is Cathie Wood's ARK ETF, where she took a bunch of what she saw to be moonshot instruments and bundled them into one essentially exchange traded fund. Now, a lot of people are going to obviously ask, what is an exchange traded fund? And there is a diagram I can kind of show you to really sort of help in a bit of a way here. So as we know with normal stocks, right, you can buy a stock, right, or you can sell a stock. When it's a CFD, a contract for difference, as we trade the financial markets like Forex, we are able to buy or sell, meaning go long or go short on a particular instrument, a particular stock, which is a CFD, a contract for difference. We don't own the underlying assets. But in the normal cases of a stock, you would buy a stock, and that's pretty much all you can really do there. Where a managed fund, in this case, is a fund that is managed, and they buy and sell whatever they want, add portfolios to those positions, so on and so forth. And an ETF sits in the middle of these two, right? Meaning that we can trade it within the day. It is diversified with a bunch of different elements. And in this case, when we're talking about all these crypto ETFs, they can be a combination of just one cryptocurrency that is adding positions, or it can be bundled, where there's a bit of crypto, there's a bit of Ethereum, there's a bit of Litecoin, Dogecoin, whatever the case may be. And in essence, you buy or in this case with a CFD, we should in the future be able to buy or short the whole fund itself. But much like S&P 500 and NASDAQ, you can kind of consider it a very similar type thing. They generally bundle the instruments or the assets that have the highest likelihood to perform the best. And they would diversify and remove assets, include assets. So I think this is going to be a very big way of trading in the future, where we're able to long-term invest in some of these ETFs. And like I said, if you want to understand more about that, you can Google Cathie Wood's ARK ETF, right? And that's been quite controversial. She's taken some big hits. She got, she pretty much liquidated her position in Tesla before it ran its full distance. So you can obviously have a look at that and what all that means. And so those are some of the big items that are being discussed this week. And again, like I said, for today, our main focus is going to be around the Purchaser Manager Index. Now, the reason why this is going to be of such importance is everybody's heard about the shortages of in the supply chain in general, right? In terms of chip shortages, in terms of anything that involves manufacturing, that people are super worried that goods for the festive season are going to be delayed. Amazon announced a few days ago their new chief executive that they're going to be spending billions of dollars to essentially try and alleviate the supply chain shortage that is currently busy happening. A lot of other companies are chartering their own shipping vessels to actually move product quicker than what the supply is actually allowing it to obviously happen. So this is going to be a big item we can obviously take quite a bit of advantage of. But now moving into the markets, and before I do that for a second, I just want to see who's all here with us and just give you guys a little bit of shout out. We have Hein in the house, welcome my brother. We have Mackenzie, Togita, Tauke we got in the house, Leonie, Frank, Jason, Gilbert, Marshall, Alan, Siegfried, and Alex. Welcome guys, welcome this morning. Okay, so the time you've all been waiting for, there's some massive opportunities I want to be showing you, and some of these opportunities we may be able to take together now, and depending where they're currently sitting. So let's jump into it and let's have a look at what the markets are showing us and where we can take advantage of. So the first big item that I want to talk about this morning is the dollar index. So this is currently the dollar index. You guys know the story if you're brand new to this, and if this is your first time watching ever, if you're brand new to the DVDM markets group, please drop and put in a hand and say I'm brand new here, just so we can see that you're new and you can get a nice warm welcome, and everyone can just greet you. But this is the dollar index in its performance against all the other major currencies, with a bit of a weigh in on gold and some other items. But in essence, we can see that, early September, the dollar index was pumping, and then we started to get this little bit of a correction, right? So impulse and correction within the markets. Now, we broke out of this area as we discussed last week, but then we received this whipsaw here in this market, where this is where we saw the price of gold on Thursday and Friday skyrocket and then subsequently fall as the dollar regained a little bit of pace here. Now, the most important thing to notice is that if we have a look on a 30-minute time frame, I'm just going to go to a 30-minute time frame. If I draw my fib fan out here, and this is something I failed to do last week, which I really should have, because it really would have shown us why we got that whipsaw there. You can see that the 88.2 fib fan, I'm going to zoom in one more click for you guys. The 88.2 fib fan, which is this one over here, which generally speaking highlights the absolute area, which in a market, if we have an impulse towards the downside and we have our fib fan drawn out, all the different degrees, the 38.2, 50, 61.8, 78.6, the 88.2 degree fib fan essentially highlights in a bear impulse, the edge of that market. So the second we go past the 88.2, that bear move in technicality is dead. All right. So this is quite exciting to obviously see on the dollar index right now, because not only are we seeing that bear move is dead, but we can also see why we got that little bit of manipulation, that spike towards the downside, and then that recovery towards the top. Now, if you have a look at where we're currently sitting, we're sitting above the 88.2 fib fan. We're still sitting in a nice clean market structure that, in essence, from everything I can tell, is positioning the dollar for some sort of rally or breakout or new impulse, as we've seen for the month of September. So we could be entering the month of November into a whole new rally season for the dollar. Now, this can obviously linger, obviously understanding that we do have NFP due on Friday. We could see some performance over today and tomorrow, potentially up until about Thursday. We could see a little bit of performance from the dollar, but generally leading up to the last day before NFP, markets generally flatten out, specifically on the trading volumes on the dollar, waiting for that jobs report, seeing how many people are employed, how many people are unemployed. And specifically this particular report is going to have quite a big effect on the markets. You can go back on all the previous reports, and this can have quite a big one, because this prepares a lot of entities for the holiday season, right? This is the last decent report we get outside of the first reports in December for November that will position the markets to show, how strong is the labor force, how equipped or under-equipped or understaffed rather is the different entities going to be in the US. And this is obviously quite a big one for the dollar. So I think today, this week, we're going to see quite a big move. And like I said earlier, I will be trading this live with all of my masters, as well as some of the people within the Signals group. Guys, we have a couple new masters that have joined the academy in the last little bit, and I've waited specifically for this month. We had a couple people join end of last week, a week or before, but I really wanted to welcome everybody at the exact same time. So on Wednesday's public edition, I'll be welcoming all of the masters. That'll be in the Dollars for Lunch free session. I'll be welcoming each of the masters to the brand new DVDM Markets Master Series. So massive welcome to anybody that is there with us, and I think this is the first time Greg is obviously with us as well. So massive welcome to the family, Greg, and I trust you are going to make many pips ahead in the next year and so. Okay, so moving on to a couple opportunities that I do foresee. So the first opportunity that I see this morning is going to be Euro GBP. Now, as I've just discussed, the Euro's got some big data due for us from quarter to 10. I just want to confirm that. Quarter to 10, yeah. Quarter to 11. We start with Italian, then French, then German, and then we just get general European manufacturing PMI. So I'm going to wait on this specific trade until quarter to 10. As you can see here, we are in a little bit of a rising formation, and I'll just get in that a little bit tighter. This is on a 4-hour time frame. And what I can definitely see here is the volume towards the top side of this market is busy. It's getting a little bit thin, right? We're making less impulsive moves towards the top side. And this represents pretty much from last night until this morning. We're seeing a little bit of a thinnish market, even though the European session is about to start. We're getting a really, really thin market structure here. Now, another thing to also note when we get to Euro GBP is that we have a technical resistance at 0.85 flat, right? If we go back in time here, we can also see that that 0.85 flat mark has been a substantial hurdle for Euro GBP to get over in the past. We've rejected multiple times, right, at this value and at this level. And I do think this represents for if we get a poor purchaser manager index rating on all 3 or 4 of those releases that we are getting, I certainly think that a big short opportunity is valid here on Euro GBP. Now, I will be issuing this to the signals group as well as to the masters as we get that data at Q2. I'll be sending that into the signals group and into the masters group, depending on what I choose to end up doing here. We will either short this particular position. I'd be worried about buying it right now, just because we don't really buy high, right? We tend to want to buy low and sell high, and so in this particular case I would be worried about buying Euro GBP because obviously we're late to the party when this market structure already moved. But I do think the perfect storm exists for a sell opportunity. We do have the opportunity here to bank about 40 odd pips, and because we're going to have a fairly tight stop, I don't see us having a massive stop here. We'll probably have about a 10 to 15 pip stop loss. It means we can take a little bit of a bigger trade on this position. So even something like a 1 lot position here with 40 odd pips, that should represent about 400 US dollars. So a nice 7,000-8,000 rand trade, quick trade. Buy 3 of those positions. You know, it's a quick 15 grand, 15 to 20 grand, depending how you position yourselves, which is something I'm going to take advantage of as well, like I said, at Q2. Hi, please contact Leonie and she will get you added to the signals group. Thank you, my dear brother. All right, so that's Euro GBP. VIX, guys, also another interesting one. VIX 75, as you guys all know, there's a synthetic asset, and as we saw last week, we started to move towards a sideways market, and at that point last week I issued out a buy where we were there, issued out a buy into, I think it was a live session that we were trading, and some of you obviously rode this buy session out, and I think this represented or banked probably about 300 to 400, if I'm not mistaken, if not more. This might have been about 500-600 pips or so, and then we started to move into this new market structure. Now, VIX 75 essentially is following, and I want you to pay attention to, again, the fib fan here. Initially, we broke down below the 61.8 fib fan, and we kept retesting, and then eventually failed and moved down. We are again at the infamous 78.6, right? 78.6 fib fan here. And we are rejecting off of that 78.6 fib fan. Now, what will be interesting, I'm not looking to, buy this off of this fib fan. It would have been nice if it was, a couple hours ago or so. Essentially, what I'm looking is for a new market structure to essentially evolve and form to create this next impulse on VIX 75 towards the top side. The only item to obviously be aware of here is the fact that we came down and we're not really correcting to any known previous fib levels. I think, let me get this one out of here. We're not correcting to any known fib levels, so let's just try and see if we can do it that way. Okay, so the 38.2 is our closest fib level that we potentially are at the moment, and really the test here is going to be whether we can break structure and then continue outside of this particular channel right here. Now, again, this represents the same as we've had before. This represents a scalping opportunity where we're able to, take a couple hundred pips between these ranges. And this is just for you guys to note, and for those of you who enjoy trading VIX 75, this is an opportunity for you. But what I would definitely do is set alerts at this 23.6 by drawing your Fibonacci retracement from market high to low, to the top end of the market, which will be the 23rd of last month, and then just note that 23.6. Set up some alerts here on that 23.6, because should we get a breach of that, we then will get that next rally towards the top side. In the same essence, we failed to breach this level here. We would then need to map out this market structure nice and clearly, and that would represent a short opportunity just under that 23.6. To be honest with you, I think I will short this, for the reason being that we have not yet corrected down to a decent fib level. If we were closer to the 61.8, this would also represent the 88.2 diagonal fib fan, and this is something that I would look at buying off of, because not only then have we corrected to the golden retracement ratio, we have that 88.2 fib fan giving us that support to then go long. So that's kind of where I would like to buy this. At the moment, the trend is our friend. We are in a bear market, and so I would certainly be looking for a short at the 23.6. A break of the 23.6 will represent a new market structure for a buy, but ultimately my goal is down here at the 61.8, which will also represent that diagonal fib fan. Okay, as we discussed last week in terms of NASDAQ, so NASDAQ has performed extremely well. We were here last week and I explained to you that a break of the 78.6 here would represent the next big move here, and you can see we obviously did not correct to any fib level, because we can now see that this is the correction and that is the impulse, of which we always knew because of the trajectory of NASDAQ, right? NASDAQ has just been an absolute monster. The big buy opportunity, like we said, was at that pullback down by market structure, but now we see a much bigger structure at play here. And we aren't quite yet at a market high. I was looking at it this morning, to see where would we be at a market high that we could potentially look at shorting it. So this is what NASDAQ has been doing. Absolute machine. NASDAQ has just been performing massively. And just a fun fact, guys, if you'd invested, let's say 100,000 Rand of your own money into a bank, into a million Rand into Investec, you're probably looking at about 5-6, maybe 7.5% after fees, right? To account management fees, to whatever the case may be, you're looking at about 7% a year. If you invested into the US 100 or NASDAQ, you would have received over 26, I think it's 26 or 28% year on year, just on sitting and having your money in the US 100. So it's obviously massive. With leverage and with the tools we have, trading this as a contract for difference or CFD, that obviously that yield is much higher. This is just based on a 1-to-1 ratio. If you took 100,000 Rand or whatever value and put it straight into NASDAQ, provided the right time, you don't want to put it in a market high, because then there's a pullback and you could be in a negative. But if you did a 1-to-1 investment into NASDAQ, something I can't remember what the date is, either 26 or 28% growth ROI year on year. So it just makes you think, right? So in any event, I think there will be an opportunity for some sort of break here. We would just have to map out this market structure fairly carefully to try and obviously identify where that break may be. So we're not getting super clean market structure here. I think this is where the actual market is. I think that's a little bit of a fake out or breakout there. So this would be obviously be pretty important to just monitor. Should we get a break in this trend line, and this is on a 30-minute time frame, it could represent a little bit of a short for US 100 that you guys can obviously monitor and take advantage of. Now, gold, I see another opportunity on. This is XAU USD gold. As we saw last week, we took a short opportunity on gold. Let's just have a look here quickly. Where are we? Let's just have a look where we were last week. There we go. Okay. Okay, there we go, beautiful. So we took a short opportunity in gold last week. We were around about this position. She came back down to market structure. I think it was that move over there, if I'm not mistaken. Came back down to market structure, hit our first TP, and this is the one I think we entered into live. And then continued to rally higher into structure, and then broke down with the movements on the dollar, and now we're in this new space, in this new place. Now this is quite interesting for me in terms of what gold is attempting to do, because if we have a look on a 30-minute time frame, we can clearly see we have this new sort of structure at play here, and I do believe that the fact that we've broken this resistance level, we may come down for a retest. I do think that the price of gold, even though we're supposed to see dollar strength, we have also seen in the last few days that isn't completely correlated or directly correlated. We obviously want to have a look at what gold ends up doing. Does it now follow a new bull structure, and to where will it follow? And I've mapped out a ceiling of where this could end up being, and this ceiling will also then mark the 88.2 fib retracement level, where we could see potentially by Friday, if NASDAQ is essentially, if we see the jobs reports release come out closer to Friday and gold is sitting at this 88.2, that is definitely a place I'd be very, very keen to look at a massive short on gold and then a further break of structure. Now, we can also see that the pullback that we saw on the 28th and 29th, in terms of that dollar rally of strength, this was not a random touch either. We had previously marked out this market structure and where this could have ended up going. So if you'd mapped out the structure with me, you could have potentially have caught this for a buy in terms of that pullback, and that would have been a nice little rally of about 200 odd pips or so. I have saved ZAR for not necessarily last, but it is something that I obviously want to talk about. I think it's going to be massive. We just saw this morning, a couple minutes ago, USD CAD. This is a very, very small time frame, but I've also noticed a little bit of a pattern here, in the sense that here we had our higher highs, and obviously we had this market structure rallying. We're making these lower highs, and in essence, we are trying to make a push through of this value here. Now, this is a 5-minute time frame. This is a scalping time frame for those of you who enjoy your quick trades in and or out. And this obviously represents a little bit of strength right now on the Canadian. And the key here is the fact that we're getting this little bit of a spike here on this 5-minute time frame, and then potential rejection across these three highs here. Remember, this is 5 minutes, so this is only looking at literally from the 29th. Oh, sorry, there's a 15-minute time frame. From the 29th till today, we've made this triple highs. If we get a rejection on USD CAD here, right? So we get some sort of weakening dollar for whatever reason, and we break this line. This is on 15 minutes. This would be our trigger to get into a short on USD CAD. So nice little scalp opportunity, and that's for you guys just to monitor, draw it out in your system, and obviously monitor that. Should we get that break in structure, then that is your opportunity to then short the price of USD CAD. Now, USD ZAR, I have been saving because I'm very, very excited about this one. As you guys know, I've been spending a lot of time on USD ZAR. I was meant to have been teaching the strategy last week, Thursday. There's some fine tuning that I'm still doing to the strategy, looking at a day by day basis. And I want to show you guys something that's pretty exciting this morning. So we all know the bigger picture in terms of the price of the Rand, right? We all know where this is busy going, and we can see that, you know, the Rand has, you know, had amazing performance against the dollar. That was super sarcastic, right? The Rand has lost a ton of value against the dollar in the last 10 years. So well done to the ANC on that one. If you voted for them, you can expect this to continue probably to 20-25 Rand to the dollar. Any event, so as we can see here, we keep making these spikes. We come down to a level of support, which we've seen in the past, and we obviously have anticipated that. Now, we've made that spike previously. We've come down to this market low. Let me just maybe go to daily. There we go. So we've made this market bottom already on the 10th of June. The issue that I was having with South African Rand was the fact that we had this diagonal market structure here, that I was really worried that we weren't going to get above it, and there would be some sort of issues to prevent us from making this move above this level. But we subsequently have broken above that. We broke above that pretty much yesterday. We spiked through that level, and in essence, what it means now is we are in a new phase of this market. Now, going down to an hour, I want to show you this new structure that we're in, and in essence, what we see end up happening is specifically in these markets where we got these little impulsive structures, is that and I'm going to be teaching this on Thursday specifically, is that at the 8 or 9 o'clock candle, we see a little bit of an impulse, a little bit of a movement on a smaller structure, and then we see that reversal and break, and then whatever ends up happening on the 10 o'clock candle, which represents the 9 o'clock mark, which is in 15 minutes, we then see that as a continuation towards whichever direction it's going to be. Now, specifically in a bull market, should we get some sort of pullback, this should then continue to rally. However, let's just see here what time it is we're getting this move at. Okay. So we should then see a whole new structure on ZAR developing towards the downside. Now, as this market comes alive, and you can see the USD ZAR market is very thin, this is a 1 minute time frame. As the market comes alive, which we see now, we're going to start to see these corrections and pullbacks, and then we will see a new market develop towards the downside, which is what I'm going to be trading for the balance of the day today. In essence, as this market develops, I'm going to be taking advantage from a scalping perspective of how this market moves. Now, also just a side note to anyone that is looking to scalp the price of USD ZAR, the biggest thing you have to pay attention to, guys, is the spread, right? In early hours of the morning, right, the spread is massive. As markets start to open up, we start to see the spread reduce. At the moment, the spread is massive because it's just opening up the markets. You want the spread to reduce and be a little bit more tradable or trade friendly from a scalping perspective, and it will reduce around about half, just depending by when you enter. And this could be, you know, between now and in the next 20 to 30 minutes. And I usually see after 9 a.m. the spread normalizes, we have a new trend, we have a new market direction, and that is where I start my scalping season. But as you can see here, in terms of the last hour, we have broken this little bit of a bull market structure, and then we should start to see over the course of today, USD ZAR should essentially start to fall, and this will allow us opportunities to scalp the price of USD ZAR towards the downside. So this is something you definitely want to pay attention to. This market structure will be extremely apparent on a 1 minute time frame, and that is then up to you guys to obviously map out and obviously trade as we get these pullbacks, and as we start to see this market structure develop, we will then obviously be able to trade that. Now, we've got almost all indications here that this is going to be a little bit of a bearish market. However, at 9 o'clock, as I hinted towards the other day with you guys, at that 9 o'clock mark is when we start to see those impulses or that new market structure. Example here is this is the 27th, and we can see that USD ZAR sort of, as markets open, did a little bit of a correction as we're seeing now, and at the 10 o'clock candle, which is the 9 o'clock real-time mark, we then see that new move towards the top side. The only thing I don't like about what we're seeing now is the fact that we have a break of this little, you know, rising structure. I'd be interested to see whether USD ZAR will be able to make a pullback towards the top side at that 10 o'clock candle, and if it does, if we're able to break and then continue the structure. So USD ZAR is going to be an amazing scalp opportunity, I think, over today, tomorrow, and specifically we will also then trade that on Friday when we get that unemployment data and unemployment rates. Okay, so the main item for today is going to be Euro GBP. Depending on what sort of data we end up getting at 10:45, we will then obviously take advantage of this. If we get an underwhelming result, the euro is going to buy less and less of the pound, Euro GBP is going to fall. If we get a great strong data point or data release there, obviously I wouldn't buy this right now. We don't buy things that are already in the sky. We obviously want to sell high and buy low in that particular case. So these are the items that I'm looking at for the start of this week. As I said, VIX 75, NASDAQ, I don't recommend, if you want to scalp NASDAQ, no problem, but certainly this is not a position that you want to hold long term, because the trend is not your friend on a short position. NASDAQ is an absolute machine. We obviously want to monitor the price of gold in terms of if it's able to sustain and move outside of this little market structure here. This is on a 30-minute time frame. We then consider buying it up to the point of NFP, whether we can then consider selling it, and if we then break this market structure on a 30-minute time frame, we would then consider selling it even today, as well as obviously monitoring the dollar index to make sure we maintain above that 88.2 for FAN. And then obviously USD CAD, we can see now is busy pulling back off of that level there. So again, this is pulling back. The fact that we got this spike towards the top side tells me that, you know, this is a potential short. You'll generally see a large amount of momentum moving out of the structure just before the opposite ends up happening, right? And this is essentially called a bull trap, where markets will punch through and everyone will say, okay, it's going to be a buy. Then we'll see a correction and then we'll see a break towards the downside. So the fact that we got this increased momentum on the start of this market tells me we should definitely monitor for some sort of break towards the downside, or a break towards the top side is definitely going to be worthwhile. And USDs are something I'm going to keep my eyes on very, very closely. And what I would recommend you to do is obviously keep your eye on that 10 o'clock candle that will be happening somewhere. I think they've updated the servers on MetaTrader through Globex, Trade 245, where we now actually have accurate numbers. Okay, so let's just have a look here. Okay, so they've updated their servers. That's amazing. So now our 9 o'clock candle is actually 9 o'clock. That's amazing. It makes life so much easier. They must have done the update over the course of the weekend or late last week, but I'm only noticing that now. So 9 o'clock USDZAR, let's monitor what happens here. If we start to get that massive pullback, we would then be able to take advantage of that. And then obviously it should give us a new market structure we could potentially take advantage of and look at, and then potentially look for that buy, which will give us a better indication of a new market structure that we could then end up taking advantage of. Okay, let's just see here. Okay, cool, no new comments. So these are going to be the main items we're trading. This will be the outlook on the markets for this week. Again, recap, big item for today, quarter to 11. We're going to get that PMI data. We obviously have a bunch of earnings reports from different US 500 entities, as well as NFP that will be due on Friday. NFP, I'll be trading live with my masters and with the Signals group. So you want to be a part of that, make sure you either a master or part of the Signals group and entities. Okay, so guys, that's all we have for our Pips for Breakfast session. I'm going to continue trading here. I'm going to spend the day in my office and smash out some trades. As and when I see something, I will send it to my masters, and I'll send 1 or 2 trades to the Signals group for you guys to take advantage of. But I'll be sending everything I do directly to the masters for you guys to take advantage of. And that's all we have for today. So guys, thank you for joining me this morning. I will be live for my masters at 2:15 this afternoon, and we will then open up that US market and see what sort of volatility we're getting, if there's any new structures that are available to us, and we will then hopefully be able to take some trades live this afternoon at 2:15. And that is GMT +2 for everybody that is in South Africa or not in South Africa. And then I will be seeing you guys all a little bit later there. So outside of that, guys, listen, you guys must have yourselves a great day. As always, trade safe. It's all about risk management. It's all about psychology. And as always, look after yourselves. All right, guys, listen, love you. Have a great day. And I'll see you all a little bit later. Shalom.